Over the next 5 minutes, I'll be going over one of the best bread and butter strategies that I trade with on a weekly basis to pull profits from the markets. What we see actually in front of us here, this is the trade that we took live today using the strategy. It's a very simple strategy. And if I can really quantify it in a couple of words, it's taking opposing liquidity once liquidity is taken using a specific PD array, which is number one, the first presentation, or the new day or the new week opening gap. So that is the strategy. It's very simple, but you have to know what market conditions you can use it in, how market structure should look like, and what's a viable entry strategy. Okay. So let's go to the drawing board here. And this is ultimately today's price action dumbed down a bit so that we kind of see the key elements and what we should be looking at. So first and foremost, on the left-hand side here on the bottom, we have New York lows, okay? And what we're looking for when it comes to the strategy is relative equal lows, a specific session low, so your Asian high lows, your London high lows, your pre-New York high lows, etc. So in this example, we're going to be using New York lows, which is from 6 a.m. or 7 a.m. all the way till 9:30. And then above us, right before the 9:30 open, which is this blue bar right here, we've had relative equal highs form above us. So it's essentially the previous highs weren't taken by the subsequent highs, and it created liquidity that was engineered by the market to be taken at a later time and deferred. Okay, so what we did at 9:30 is we anticipated that first the lows get taken before the highs, just due to the overall bias of the day. We were bullish for the day, and it's really good to see lows first taken, then highs, as there's a higher confluence that your longs will go long and will put you to profit. So in this case, so for today, or in this example, price moved something like this over the first 8 minutes and never created the first presentation. It finally did on minute 38. It pierced the relative equal lows that we have here. And then what it did, it went higher and it took out liquidity above us. So in this example, the one of two key PD arrays that I used was the first presentation, which happened somewhere around here. And what we did is we ultimately took price long to the opposing liquidity from what was just taken using the first presentation fair value gap. Okay. So again, very simple, shouldn't be complicated. And if we kind of go back to the charts here, this is what we had here. We had our pre-New York lows. So it's essentially the first low after 6 a.m. or the lowest low. We have our buy side, which you can see here. We have 1, 2, 3, 4, 5, 6 highs that essentially left liquidity or engineered it above us. Once price created its first presentation, which is this blue bar right here, we took the trade once it broke above it, and then we were targeting buy side liquidity above us. So this trade right here that I have in this example, if you perfectly executed it, it's a 3.6 to 1, and it's very high probability as markets gyrate from liquidity to liquidity and from inefficiency to inefficiency. Markets are really doing one of two things: looking for inefficiency or tagging liquidity, okay? And this is the concept. This is my favorite intraday day trading strategy. And feel free to back test it and to see how liquidity forms on pre-market, during the market, and just see how price essentially tags and gyrates between these two levels. So this is the very simple but highly effective trading strategy. Hope you enjoyed this video. If you did, feel free to subscribe and to drop a thumbs up, and catch you in the next one. And on that note, safe trading.